Hey, what's going on, everybody? It's Friday. Friday, yeah. And look at what happened today, folks. Yesterday, what did I say? I said that these proposed tax increases, people jumped on that. That was headline trading. And I've explained to you so many times, people who headline trade, they're emotional, they have no discipline, and most important, they don't know what they're doing. I mean, they pretty much all of them have the wrong understanding when they see these headlines. And that doesn't even matter, really. What matters is what I said yesterday, like you have to go against other people's emotions. You have to keep your emotions in check, but you have to go against other people's emotions. And one of the easiest trades or opportunities that is presented like really, really often is this headline reaction stuff. So you got to go against it. So anyway, today, not surprisingly, all the headlines were, the tax increase is not going to be so bad. It's not going to be as much as Biden, is saying. And it's exactly what I said yesterday. But I want to talk about something else today. First of all, there was some news today, which I took advantage of. The Russian central bank surprised everyone and raised interest rates. I think it was by an amount bigger than what they had been kind of, hinting at or whatever. And I immediately sent out, I'll give you a tip right here, I immediately sent out, you got to sell the ruble. Now the ruble went up on that news. Okay, that's another headline trading zombie reaction. Everyone thinks that rate hikes are bullish for currency. I've been over this so many times, I'm going to explain it a little bit more in detail. But you sell the ruble, it's like, the central banks, they all do the same thing, and then they sit here, they're scratching their heads as to why those policies are not working in the fashion that they think they're supposed to work, right? Turkey raises interest rates like crazy. What happens? The lira goes down more and more and more. Japan has negative interest rates, thinking it's going to trigger inflation, and what happens? Inflation just completely disappears. And they just keep doing it. Now, if you want to see, a lot of people, when I say rate hikes are bearish for currency, rate cuts are bullish for currency, they're like, Mike, what are you talking about? It's the opposite way around. Well, it's not the opposite way around. And if you want to see what I'm talking about, very simply, go look at the futures curve of a currency like the ruble. If you go to the CME website, and you go to their FX page with all their currencies, you look at the futures curve, and as you go out month to month, the ruble gets cheaper and cheaper and cheaper. It goes down. Why? Because you're in a rising interest rate environment in Russia. That's what the central bank has been doing. And it's just like when rates are increases, when the Fed increases interest rates, what happened? Bond prices go down. It reflects a discounting which prices in that rate going out on the term structure. And now if you go to the euro term structure or the yen term structure where you have negative rates, zero or negative rates, and you look at the term structure, in other words, you look at the futures contracts going out from now all the way, I think they got them listed out to 2026, the euro is higher, the yen is higher. And you could do the same thing with commodities, all right? Commodities are priced in dollars, most of them. In a rising interest rate environment, you will see commodity prices sloped positively, the curve. In other words, they get more expensive as you go out. It doesn't squash inflation, rising rates. It raises it because it increases the cost of carry of these commodities, and it's reflected in the futures prices. They get more expensive. And the opposite is true. If the Fed were cutting rates, you would see that positive curve flatten out. In other words, futures prices would come down relative to spot prices. In other words, a diminishing of inflationary pressures. It's all, I mean, it's right there. The markets react to that in exactly the fashion that I'm talking about. But yet people, oh, they're raising rates. Oh, that's going to squash inflation. You know, we're going to sell gold. We're going to sell commodity. That's the exact opposite. Oh, we're going to buy the dollar. So when you think about it, I mean, if the forecasts are correct that, let's say, the future monetary policy by the Fed is going to ultimately be rising interest rates, that's what they're saying. I don't know if that's going to happen. The Fed's saying they're not going to do that until 2024. But if, in fact, we're looking at a forward curve where the Fed is going to start raising rates, the dollar's just going to keep going down. I mean, as it is right now with U.S. rates above that of the euro, above the yen, way above the yen, above the British pound, above all these other currencies, dollar's just going to keep going down. The curve is going to reflect that. The curve already reflects that. So you don't have to take my word for it. I mean, the markets are already pricing that in. Because that is the way it works. That's the way it works. So, I mean, you could go against that, thinking like you're smart, and you follow all that erroneous, flawed information and misunderstanding that is put out there all the time. I mean, we see that all the time. Oh, Fed is raising rates, I better buy the dollar. No. I mean, yeah, you could, what happens is this. When the Fed announces something like that, look at yesterday was a classic example with the ECB said it's going to continue its bond buying. Just that very statement yesterday, they sold the euro down. Now where is it today? It's right back up at its highs. You got to buy every dip. You may hate what is going on in Europe politically. You may hate what's going on in terms of their dealing with the COVID situation. The fact of the matter is, it's that combination of monetary and fiscal policy that's just going to dictate where the currency is going to be. Same thing here in the U.S. So go see for yourself. Go look at the curves, and you could go through the list. You could look at the Forex curves. You could look at commodity curves. You could look at gold. You could look at silver. It reflects interest rates, and it also, in a broader macro sense, it's going to reflect fiscal policy. You know, they're printing money. And fiscal policy, that's real printing money. That's real printing money. It's the most printing I've ever seen in my lifetime. It's Friday, folks. You gotta learn this stuff. It's not that hard. And you gotta wean yourself off of all this misinformation. And most of it, look, a lot of it, I can't say not, but a lot of it comes from these quacks, these goofball nut jobs out there. But, and that's bad enough if you listen to those guys. But a lot of it also comes from Wall Street. From these supposedly, really serious, smart people. A lot of it comes from Wall Street. They just get it wrong. That's why they got to charge fees and everything else like that, because that's the only way they can really make money. They can't make money on their forecasts, on their actual, speculation and what's going to happen. I mean, I saw something today where I think Morgan Stanley's saying like, that's it for the market because this is their deep analysis. The easy gains are gone. I mean, what does that mean? That's just figurative language. The easy gains are gone. What does that mean? That has no meaning whatsoever. It's not based on anything. It's just like some cliche. Like it's baked in. Remember? I talked about that. Don't be slick. Or good news is bad. Good news is bad news. No, good news is good news. Bad news is bad news. But they try to be slick. Like, oh, look, I'm so smart. Good news is bad news. What do you mean? Well, it's baked in. Well, what do you mean? It's a bunch of figurative language. They don't know what they're talking about. They have to disguise it in this flowery language because they can't explain it scientifically. So it's like, and they don't understand it. And frankly, they don't want to understand it. It's enough that they go on there, you know, with their suits, and they go on CNBC and they talk real serious, you know, and everybody's like, oh yeah, look at this guy, he's from so-and-so or whatever, or look at this woman, she's from, they don't know what they're talking about. So check it out, the futures curve. It tells you right there what's going to happen. Have a great weekend. I'll make a video tomorrow. All right, bye everybody.